You are listening to the New Jersey Business Podcast with your friend, host, all-around good guy, and co-owner of Get It Cleaned, Paul Valverde. Now, on to the show.
Hello, New Jersey. What's going on? I'm here with you again today with another episode of the New Jersey Business Podcast. I'm so pumped to have a special guest with me today. His name is Anthony DellaPelle. He is the manager partner of McKirdy, Riskin, Olson, and DellaPelle attorneys at law. I'm so glad that you accept our invitation, Tony. Thank you so much for joining us. And it's good to have you, man.
Well, thank you so much. It's a pleasure to be here and looking forward to our conversation.
Tony, will you please begin by introducing yourself, maybe telling us a little bit about yourself? I'm sure our listeners would love to hear that.
Sure. Well, it's not that complicated. I'm a lifelong New Jersey resident other than going away to college. I grew up in Essex County in Livingston, and I've been living in Morris County since the mid-'80s. I came back from college in Pennsylvania to go to law school here in New Jersey at Seton Hall. And I've lived in Morris Township for about 30 years now. And I married my college sweetheart. And we have 3 kids who are all adults. I still have one of them. The youngest one is still in college, but she'll be graduating this coming year. And we've been in this community for a long time, and my career has essentially it's a statewide business, as you'll hear in a little while. But I've been based in the Morris County area for my entire career.
Wonderful. So, as an attorney, do you specialize in a particular area?
Well, my law firm is a firm that is not a general practice law firm. We specialize in 2 real estate areas of the law. The first is called Eminent Domain Law, where we represent people who own real estate when the government is taking their property. So, for instance, if you own property on a state highway and they needed to widen the highway and the government took some of your land by eminent domain, we would represent you in that. The other practice area is actually related to the eminent domain law. It's real estate tax appeals. And both of these practice areas involve litigation that is focused on usually the value of the real estate. So we work a lot with real estate appraisers and brokers and professional planners and engineers when we're talking about real estate values in these litigation senses.
So talk to me a little bit more about property tax appeals. Well,
it's a pretty limited group of people that do this in New Jersey. There are not that many lawyers that do it. We have 6 lawyers here in my firm, and our firm has been around for more than 50 years. I've been at this firm for 25 years, and all we do is these 2 things. So when you get involved in a real estate tax appeal, you're essentially going to challenge not necessarily the amount of taxes you pay in and of itself, but what you are doing is you are challenging the assessment that is one of the 2 components of the real estate tax product. So in other words, we can hopefully help you reduce your assessment, and then that assessment is multiplied towards a tax rate to figure out what your property taxes are. At the end of the day, most people care about how much they pay, and hopefully we can help you reduce those expenses, which for most people, the real estate taxes are the second biggest expense after the mortgage.
Yeah. So for someone who is listening, who either owns a residential property or commercial property, how would they know if they will qualify for something like this?
So your property taxes are reviewable or appealable every year. It's a very cyclical business for us, and I'll explain where we are in the cycle to try to answer your question, Paul. In January, if you own real estate in New Jersey, towards the end of January, beginning of February, everyone's going to get a postcard from your local tax assessor, and that will tell you what your assessment is for that year. So this past year, at the end of January, you probably got a little white and blue postcard that said you own that property, here's what your assessment is. And that notifies you of what that component of your property taxes would be for that year. In most cases, after you get the postcard, you would have until April 1st of that year to file an appeal. There are instances in which there's a May 1st deadline. If the town is reassessing all the properties in town, you get a little more time to do it. But for the most part, it's April 1st. If your property's in Monmouth County or Burlington County, you might have to file your appeal by January. But in those two counties, you'll get your notice before January, so you know when to appeal by January. But for the most part, it's April 1st. And that gives you a little time to figure out whether or not there's a way to reduce your property tax burden, which obviously if it's your home and it's a very big expense, if you can, save several hundred or thousand or more dollars, per year or per month, even, that's a significant savings that you can use for other things. And if it's a commercial property, the owner always would have the right to file an appeal, or the landlord, let's say. But if the property is leased, the tenants may also have the right to file a tax appeal, and they'd have to look to their lease to determine whether they have the right to do that. It's very common with commercial properties that the tenants pay the property taxes, and usually that triggers an opportunity for them to be able to have some say in the property tax bills that they're paying. So you get the notice in January. For the most part, you have to decide by April 1st. If you don't file on time, you're too late. You have to wait until next year. But if you do file, you're then going to decide where you will file. And there are two places that you can file a tax appeal in New Jersey. Every county has a county tax board that handles appeals filed in the county where the property lies. So I live in Morris County. I'd have to file my appeal in the Morris County Tax Board, which is in Morristown. Most of the tax boards are near the county courthouse, but they're not always there. They might be in an office building somewhere else. But if your assessment exceeds $1 million, not the value of the property, but the assessment, you have an option to file a case in the New Jersey Tax Court, which is a special court created just for tax matters. And they handle the commercial cases where the assessments are large, or they also handle larger residential cases where the assessment is large. And then finally, if you appeal to the county and you lose, you can appeal that decision to the state tax court to go up the ladder, if you will. Mm-hmm. The tax court has a small claims division, which will handle residential appeals. And then the court also handles the very large appeals. We always have a lot of large appeals pending in addition to the houses. We do everything from the smallest house to the largest commercial property, and it could be a very large shopping center with 1 million square feet of buildings. It could be a mall. It could be a factory. It could be large office buildings or office complexes and things like that. So just to get back to your question, you're going to file by April. If it's a small case, there's a pretty strong chance that the case would be heard and finalized and determined before the end of the calendar year. And the hearings for the county typically take place over the summer. And then what will happen is if you get an appeal filed and you win, you might get a refund because you might have been paying your taxes during the course of the year until your appeal is resolved. And you do have to pay them as they're billed to you. Mm-hmm. But then you can get a refund or credit for any overpayment, and that would come later in the year. So once you appeal, if you get a reduction, the assessment will be essentially frozen for not only that year. Let's say you filed in 2021, but it will be frozen for the 2 years after that to protect you from any increases. So any result that you got this year would be good for 2022 and 2023. So it's good for 3 years under what we call the freeze law, the freeze act. There's a separate law that freezes the assessments. The only exception to the freeze act to freeze the assessments is if you change the property, like if you had a house and you built an addition on it, that changes it and you can get a new assessment. Or if it was land and you built a building, so it's changed, then that would be an exception. Towns also in New Jersey will periodically do reassessments of all the properties in town. They don't do it every year, Some towns they do, but very few of them do it that way. Most do it every 5 to 10 years. And when that happens, there's no freeze because every property is being reassessed, and it will make the assessments more current. So, the bigger cases will take quite a while to resolve. They might take several years, and there could be a lot at stake, with hundreds of thousands of dollars of property tax potential refunds. And they do take a while to wind their way through the court system, especially, as the markets have changed, real estate markets have changed, and retail properties have changed, as I'm sure people know. Even before COVID, there were a lot of big, old, dark stores around that people had left, and a lot of vacancies. And as the retail market was adapting, those cases will take a couple of years to resolve. So that's the sum and substance of how it works. There are some more specifics as to things that you should look for, but I wanted to make sure I answered your question, and happy to to take the discussion however you wish.
Sure. So how would someone know if they will qualify for something like this? In other words, anyone who feels that they're paying too much taxes can look into this, or is certain people that maybe there are some pre-qualifications that will lead them to know, like, yes, you will qualify, or no, you wouldn't qualify?
I think the basic thing that people need to understand in order to do an evaluation of this for their own purposes, is when they find out what the assessment is, they can then figure out, at least preliminarily, whether or not an appeal might be viable. And essentially what you have to do is you have to take the assessment, and then the first step is to figure out whether the assessment represents the fair market value of the property or not. So let me use an example, because the assessments don't always indicate the fair market value because of a ratio that is used by the tax assessors in New Jersey. If I had a house in my town, in Morris Township, and it was assessed at $1 million, that property and that assessment would essentially reflect a value of close to $1 million. But if that same assessment existed for a property in another town in Morris County called East Hanover, that assessment would reflect a much different value. And here's why. I mentioned a few moments ago that towns don't reassess property every year. At least most towns don't. So what that means is that the assessment's going to stay the same. But if they don't reassess for 5 or 10 years, it's changed, hasn't it? Market values usually go up for real estate, but not always. Sometimes they're flat or they go down. And because the assessment stays the same for some period of time, the tax assessors can use something called an equalization ratio. And what that does is it equalizes the assessment by making adjustments to the assessment that are intended to reflect changes in the market. So let me give you an example, and then I'll come back to East Hanover and Morris Township to try to make some sense to folks. If I have a property that's assessed at $500,000 and the ratio is 100%, that means that the property is intended to represent 100% of its market value. Therefore, the assessment is supposed to indicate a fair market value of $500,000. But if I have a property that is assessed at $500,000 and the equalization ratio is 50%, 50, what that means is that the assessment is supposed to represent 50% of the market value. So to take the assessment and figure out what market value it indicates, you have to know the ratio and you have to divide the assessment by the ratio. So in my example, you take $500,000, you divide it by 50% or a half. And what that means is that it should be worth $1 million, right? $500,000 divided by 0.5 or 1/2 is $1 million. So that's probably the most difficult part of the process, that you have to actually do the math. The figures are all available publicly and online, by the way. So that is something that anyone can find out. And I'll share with you after we conclude the web addresses for those resources, so you can put them in your show notes. But you can look up your assessment online. You can look up your ratio online. It changes every year. And if you take the assessment and you divide it by the ratio, then you understand at least what the market value is supposed to be. So now, a few moments ago, I said that $1 million assessment in two different towns in the same county can indicate different values. And in general terms, the assessment of $1 million in my town, Morris Township, is supposed to represent a value of about $1 million, whereas an assessment of $1 million in East Hanover is supposed to represent a value of about $1.3 million. And that's because the ratio in East Hanover is about 70%. So you take the million, you divide it by 0.7, you get about $1.3 million. So that's the first step. And it's actually, it's not complicated, but you need to know where to look for those numbers. And then you just do the math and you plug it into your calculator and you can figure it out. So once you've done that, then comes the next step. So let's say that my property is in East Hanover and it's assessed at $1 million. And that equalization ratio is applied, and it shows that my property is intended to be worth about $1.3 million because it's assessed at $1 million under the ratio. You now got to figure out, what is it worth? And I think most of your listeners, at least for a home, should be able to do that as well as we can, especially with a lot of internet resources these days like Zillow, right? And you can find out what they think your property is worth. And ultimately, for a residential property, those properties are usually valued by comparing the property that you're valuing to other properties that have sold. We call them comps, comparable sales, right? So if I have a 3,000 square foot house in East Hanover and I want to figure out what it's worth, I might see what other people paid for 3,000 square foot homes in the same town that are the same age, same number of bedrooms, same neighborhood, maybe the same lot size, those kinds of things, right? And you can do that online with some help. Ultimately, you might need a real estate appraisal to confirm it if you're going to go to court. But I think you can do the initial stuff a lot on your own, especially for residential property. If the market value is lower than the implied value by the assessment, then you might have a case for an appeal. So, what you have to do is know what the assessed value represents, then figure out the market value. And then if the assessment is higher than the market value, or the market value is lower than the assessment, you might be a candidate for an appeal. Right. So, that process, again, it's not something that I think is terribly complicated, but you have to be able to follow those specific steps to determine whether or not you can win an appeal, because you don't want to waste time by filing one if you're not going to win. You have to have a pretty, strong level of confidence. One of the things that we'll do is we'll always evaluate a case before we take it to see, and we run through that exercise that I've just described for you, where we find comps and we figure out if it's overassessed. And if it's a commercial property, it's usually valued a different way than using comparable sales. And that's a little different formula that we use. But ultimately, if the assessed value exceeds the market value, then you may be a candidate for an appeal. And, I don't want your listeners to think that this exercise is something that needs to take them days or weeks to figure out. I think if you have the resources to the numbers that we'll provide, and you do the math, you might be able to figure out, at least preliminarily, whether it's something that makes sense for you. And one of the things that I did not necessarily mention earlier that I want to make sure I cover is the market value for a tax appeal is supposed to be determined as of the fall of the year before the appeal. That's just the way the law works. So when I filed appeals this year in 2021, we were trying to figure out the market value as of October 1st of 2020. Okay. And next year for 2022, we're looking at the value as of October 1st of 2021. Okay. That's just the way that the statutes and the law have been set up. So if you think about the houses that we've been using as examples, a lot of people will tend to buy new homes during the summer and close during the summer, because if they have children, they want to get them into the schools in their new homes on time. So if those sales occurred in June or July or August, those are pretty close to October 1st. And those usually can provide us with a basis to evaluate whether the appeal is viable, and homeowners can do the same thing for themselves.
Yeah. So once someone has figured out that they are a candidate for this, and then they will reach out to you, and and begin the process of appealing?
Yeah, the right time to do that is typically in the fall or very early in the first part of the new year. As I said, you get those postcards in January.
Yeah.
The assessments are generally set in the fall, even though you don't get the postcard till January. So you can look it up online. And we always tell people you're doing your year-end, housekeeping, making sure you checked off all the things you were supposed to do. One of the things you want to do, you go get an annual checkup for your health with your doctor. You might want to check your property tax assessment, because every time the market changes, there's a chance that the assessed value is not going to be accurate anymore. Even though that ratio that I mentioned is supposed to adjust for the changes in the market, it doesn't always do it the right way. Yeah. Because there's only one ratio in every town, and not every property appreciates or depreciates at the same pace or rate. So it's important to do it. We screen every case on a complimentary basis to any potential client. And there are plenty of clients who don't think they have a good case that end up having a good case. And conversely, there are some times when people think that they're paying too much in property taxes, but they may not be overassessed. And at least we explain that to them. Say, listen, you do have a high property tax bill, but that's because your property is worth a certain price, and that is what generates your tax bill. But your assessment is not unfairly high. Mm-hmm. And we have found over the years that most of the people that we speak with, if we tell them that we've gone through this evaluation and we don't see enough evidence to warrant an appeal in that year in question, they appreciate knowing that at least they've checked it out. Yep. And they've understood whether or not that's a place where they may save some money. I mean, I did an appeal on my own home about 5 or 6 years ago, and I think we saved about $3,500 a year in our property taxes. That's $300 a month, right? You can have a car payment for that. Yeah. And it's a significant enough thing for most people to be concerned about that even with a smaller home, your savings could easily exceed $1,000 a year. And with a larger home or commercial property, it could be many more than $1,000 a month. So it's important. It's important for people to consider, put it on their list of due diligence as a property owner. I know people who shop their cable or their Wi-Fi service providers to see if they can save money. Some people have changed utility providers in recent years because now you can buy from other providers, and you used to be able to do that. Why not check your property taxes? Yeah. It's something that can really, really make a difference in your lives. And it's a nice thing to hear in August or September from, if you hired a lawyer to do it, they say, hey, we got your reduction, and your property taxes are going to go down, $2,000, $3,000, $4,000, $5,000 a year. And you weren't expecting that. And it's a really nice bit of news to get.
So, Tony, I'm going to just try to repeat back to you what I understood. I'm learning this for the first time. So for any of our listeners that this is the first time listening to this, this is basically, if I'm understanding correctly, is if the assessment is higher than the property value, then you are a candidate. And once we determine that you're a candidate, then some of the information that is important is that the property value that is looked at is the property value in the fall of the prior year. So maybe the property value during October of 2020, so that it will be applicable beginning 2021. And then once you've appeal for your property taxes, you're continue to pay your property taxes as you're being billed during the process. But at the end, if there is if you actually do qualify, you could get a reimbursement or even a credit. And once you're approved, this will not only apply to the year, for example, in this instance, 2021, but due to this freeze that you described, it would apply also for the next 2 years. Is that correct?
Yes, and the purpose of that law is to protect people from situations where you get a reduction, you work really hard, you might have to pay people to help you do it, whether it's an appraiser or a lawyer or both. and you get a reduction, and then they just bring it back up the next year. They can't just do that unless you've changed the property in some way to change its value, or unless they do a townwide reassessment. And if we take on a case this year, we pretty much will know whether the town is going to do a reassessment next year, because it's something that has to be planned for and will be part of our settlement discussions if we're going to settle the case. So for the most part, if there is a reassessment looming in a town, we know about it in advance, and that will change the way that we assess a matter and look at its qualities for resolution.
And after the freeze, can someone apply once again for a property tax appeal?
Well, the freeze only applies to the town. You can file every year.
Oh,
we have had clients that have done that. And it's very common on a commercial property, as markets are fluctuating, that the owners may file every year. There's no freeze on the owner.
Oh, wow. Okay. So I think that's wonderful. And I like the analogy you use about people getting their annual physical or doing that assessment of trying to cut expenses. That is a great way to cut expenses, actually.
Yeah, and think about it. If you get that postcard in the end of January, it tells you what your assessment's going to be. And this January, in 2022, most people would tend to think that, at least in northern New Jersey, the suburban communities, the real estate market's been strong, thankfully, right? And that means that for most of us who own homes, our market values of our homes have gone up. It doesn't mean that you're not entitled to a property tax reduction. What matters is whether the assessment exceeds the market value. And because there's that ratio, if the ratio that was applied is not accurate, you may still get a reduction, even if your market value has appreciated. Mm-hmm. So it's just something that you can make sure you take care of when you get the postcard. You take a look. We'll give you the resources to do it yourself if you want to try. I don't recommend that people represent themselves in court proceedings usually, but plenty of people are capable and willing to do that. But we can take a look at it for you as well. And just, you have to remember the April 1st deadline. Yeah. If you don't pay your property taxes, most people pay them through their mortgage if they have a mortgage. But if you don't pay them and you file an appeal, your appeal is going to get dismissed. That's just the way the law has been written. And if it's a commercial property and you want to appeal it, and it's an income producing property, let's say you own a store or some apartments or both. If you got a request in the prior year from your tax assessor to send the tax assessor the income and expense information on the property, if you got one, you don't only get one. If you got one and you didn't respond and you file an appeal, they can dismiss your appeal too, because that shows that you weren't cooperating with them. So that's another thing to be on the lookout for people who own commercial properties. And it doesn't have to be a very large property. It could just be, we have plenty of families that own small investment properties. That's their retirement. And they may have, especially with COVID, they may have had a store on the first floor at the street level and a couple apartments upstairs, which is a very common property type for us in New Jersey. That property may have changed drastically in value because of the restrictions of COVID. And, if they got a request from the tax assessor to send the income and expense information the year before, and they didn't respond, and then they appealed in the following year, and the town moves to dismiss the appeal, it's going to get dismissed, even if they had a good case, even if they could show that the value was lower, it's not going to be heard. So it's really important to pay attention to that as well, in addition to the April 1st filing deadline, which cannot be extended.
Thank you. Tony, so for our listeners, if after listening to this information, they look at the tax assessment, they look at the property value, they feel that they're a candidate, and they want to reach out to you, what do you suggest is the best course or the best way to get in touch with you?
Well, they can always send me an email, and I know that you're going to provide that, but there is a form on our website, which is www.mrod.law. where you can send us the information about the property, and we'll get back to you within 1 or 2 business days at most, just to tell you whether we've been able to find the records, which we usually can because they're all public records, and with an address or a lot and block, a tax lot and block, we can find the assessment records. We can evaluate it and tell you whether or not we think you have a case, and if so, then we explain the next steps and how it works. Most of that evaluation, as I said, does take place in the fall or early in the calendar year after people get their postcards. It's too late for this year. We're busy working on the cases that we filed this year, and the residential cases will hopefully get resolved either by a settlement, a voluntary reduction, or if we have to go to court, those hearings can take place. They've been doing a pretty good job in most of the counties around the state, trying to keep that going during COVID. Most of the counties have had virtual hearings. Some of them have actually done in-person hearings, especially this year, but they've taken some measures to space out people. And, it's an important aspect of local government here because so much of our property tax dollars go into local budgets and schools. So they need to know how much are they going to get. So they know how much they can put into the schools or pay to fix your roads in town or, do the other things that are supported by the property tax revenues. That's why, while many lawsuits can take a long time to resolve, property tax appeals can be resolved quickly. But the very large ones are more likely to take a longer period of time.
Well, there you have it, folks. If you're looking to appeal your property taxes, you've received some very useful information. Tony, thank you so much for your time. I really appreciate it. Thank you for educating us all today. It's really been a pleasure.
Well, I appreciate the opportunity to be here. Hopefully, we kept everybody awake. This is not the most exciting subject in the world, but it's a really important one. And I think it affects just about all of us. It certainly affects all of us who own property in New Jersey. And because we're such a highly taxed state, if there's any way that you can, find a way to save money on your taxes, that's something that you should definitely look into. And that's what we're here to help people with. I appreciate being here. Thank you so much.
Thank you.
Thanks for tuning in to today's show. If you or someone you know would like to be a guest on the show, go to NewJerseyBusinessPodcast.com. That's NewJerseyBusinessPodcast.com. We can't wait to hear from you and your business. You can also visit our website to learn about sponsorship opportunities and how to qualify for a complimentary gift. Thanks again for listening to the New Jersey Business Podcast.